So now that all the mega caps have all finally reported, and guess what? It's been nothing short of extraordinary. I mean, it's just crazy. Normally in a mega cap stock, a 5% swing big up or down is kind of the max that you see, but that wasn't true last earnings season. And this earnings season has been even more brutal with 15%, 20%, and even 35% drops in huge companies. And guess what? The guidance is even more disgusting than some of the drops were. So was investing in this kind of market a huge mistake because all signs point towards an even bigger collapse in stocks? Well, let's dig into these earnings to find those answers, and I will give you the answer to that question and why I think that way, and hopefully it doesn't make you too mad, but I gotta be honest with you guys, so that's what I'm gonna do. Heck, I'll even tell you if I like the stock or not and if I'm buying it. I just asked in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. So did last week have you up at night worried or at least thinking about what to do? Do you ever think about selling because you just don't know what else to do in this crazy market? And maybe the wild swings and noise has you checking your phone all day waiting on the latest news or for the stocks that you own to just drop off a cliff. If just one of those sounds familiar, there is good news. It is possible to sleep like a baby and not have a worry in the world through the strategies discussed in the Market Insiders private group, where we have 4 free courses, live Q&As, tons of exclusive videos and content, and you get direct access to myself and other 6- and 7-figure investors. And we have a huge sale going on right now that ends tomorrow, and the prices will never be lower, so make sure you get your membership locked in at those prices forever as long as you stay a member. And remember, before blasting me, you're not only helping yourself, but you're helping others, as half of everything goes to charity. So let's take a look at these earnings calls in order, and we will start with Netflix since it kicked off the wild swings in the market, and we will end with Apple because although it's my favorite stock, that is where the biggest clues about where the market is headed, and that's kind of what we're going to look at. So Netflix not only had a huge miss, but their guidance was just awful too once again. It's literally the worst combination you can have, and it was just ugly. So, I expected a drop in that stock, but not this big though. I mean, it took a giant beating. And remember, this stock was at $700 just 6 months ago, and now it's under $200. That is remarkable stuff given how big this company is. And this isn't a stock like Bingo that caught up in a hype run and needed to kind of cool off. This is a company that actually makes money. So am I a buyer of Netflix? Nope. Netflix has never been for me, and I'm not saying it's a bad company or anything else. I just do not feel the need to own this stock when I have so much Apple and Amazon who also compete in the same space and kind of give me exposure to streaming. So it's just not right for me or my portfolio. But I would be cautious if I was looking at this stock. Netflix has to reinvent itself, even if its valuation is much more attractive now than it was just a few months ago. This is their kind of first major challenge of needing to change the business and having competitors taking away significant chunks of market share from them. Oh yeah, and this summer we are all not stuck at home. It's basically open season for travel, vacations, and just generally getting out and doing things and not watching TV. Management has a massive challenge ahead of them, so it's kind of a wait and see approach for me. So Tesla was up next, and they had a great earnings and of course set records, and everything looked awesome. I love the numbers, I loved everything they are doing and going to do, and my position has not changed one bit on Tesla executing. I have zero concerns with Tesla now or into the foreseeable future. There's basically no concerns. But I covered the Elon Twitter drama right up here if you want the specifics. But in this environment, if your CEO's primary focus is not on the thing that is just printing money, and it's basically instead focused on something else, Wall Street will punish you. In uncertain times like this, right now, investors are looking for certainty, and they want to put their money, and more importantly, their investors are demanding that they put their money into companies who are focused on continuing to kind of bring steady profits and are not focused on free speech and other stuff like that. Elon chose to buy Twitter, and the market reacted predictably to that. So to me, this means potentially a golden opportunity to pick up more shares on the cheap. So Google reported next, and it was actually a small miss, but I didn't think the call was bad at all. If anything, I left really liking the numbers and how management is handling all the challenges. Basically the reason the numbers were not better were related to the Russia-Ukraine stuff, which is a short-term problem, not a long-term issue like Netflix is battling with their problems. Google is undervalued at $2,500 to me, in my opinion, And to me, after this earnings call, I am looking to add more on the weakness, as this is the exact scenario I love as an investor. And on to the stock who had the most pressure on it, in my opinion, coming into this earnings call, and that would be Facebook or Meta. And they had a decent earnings call actually, but the market reacted like it was an all-time great earnings call. Okay, maybe I'm exaggerating just a bit, but a 10+% jump in an earnings beat in this environment is pretty spectacular. But I actually think that had much more to do with the fact that it was so ridiculously beaten down that even a slight miss and the stock was still probably shooting up. Seriously, when you are trading cheaper than Coca-Cola, that will only last for so long for a stock like Meta. The other good news is its valuation is the cheapest out of this group by far. I mean, it's not even close despite this recent run-up. So I will continue to strategically add shares as we move forward, and I am watching the shift in the business very closely. And now on to the biggest disappointment of the group. It's not necessarily the worst earnings, but the biggest disappointment for me personally, and that would be Amazon. Amazon just missed, plain and simple, and on top of that, they guided really weak. But on the plus side, Amazon saw huge growth in Amazon Web Services, which, especially with AWS, that is where the future growth is probably going to come from. But the problem is, despite the massive, unreal growth that is there, that is still not enough to offset the inflation, supply chain issues, and other issues that are hindering their main lines of business. If I could talk, apparently talking is hindering my business. Basically, it's not good at all, and I expect Amazon to continue to stay beaten down, which seems like it's been forever now, since it's not done anything for more than a year now, and actually maybe closer to 2 years now if it keeps getting beaten down. Long term, I'm still bullish on Amazon, but short term, I don't expect much until they figure this whole thing out. It's not like in the Netflix category, but it's not in the Google category either. So the entire market hinged on Apple once again being the savior from keeping the markets from going full on into a tailspin into the oblivion. And once again, Apple put on a masterclass in how to run a business despite any challenges, any environment, just basically anything going on. Apple beat everywhere. It's just ridiculous at this stage, and for everyone who criticizes Tim Cook, I just don't see it, guys. I don't see it. You don't see numbers like this quarter after quarter in a company that seems to be maxed out and has been maxed out for years. What else can they do? I always hear nobody's going to buy the next iPhone, except they always do, every single time. And I also hear that everyone hates the fact that they lock you into their ecosystem and their ecosystem kind of sucks, but yet those numbers grow and people actually expand further into their ecosystem. And I know I'm saying that wrong, guys. I apologize. But the point is that continues to expand every single quarter. So you got to give credit where credit is due. But right there is where the music stops and why we saw the market basically tank down on Friday. It came down to guidance once again, and specifically supply chains. Last quarter, they said they saw supply chains finally easing just a little bit and they could kind of see the light at the end of the tunnel, and that sent the market on a very nice run. But this quarter, with the lockdowns in China and other macro factors, they see more supply chain headwinds coming in the next quarter, and this spells disaster for the market, as supply chains are what is repeatedly referenced in almost every earnings call as to why they're not doing as well. So the question becomes, did I make a mistake diving into this market before this quarter ever started? No, I don't believe so for 3 reasons. First, nobody can time the market, and anyone who tells you they can hasn't been investing for any length of time or is just flat out lying to you. So because I cannot time the market, I know I won't catch the bottom, and that leads me to my second point, and that is that I don't have to time the bottom perfectly to have a great long-term winning stock. My buys on Apple, Amazon, and others during the financial crisis were done too early or too late from the bottom, or nowhere close to the bottom, and they were in the red by some cases by 40% for months, and some of them closer to a year before finally, kind of turning around and starting to head to the green. And 12 or 13 years later, they all look like genius buys. And finally, I also know that some of my buys have already bottomed and we won't see those prices again. Some have not bottomed yet and are probably going to fall further, and maybe they're all going to fall more. Nobody knows what's going to happen. But I do know I'm buying great stocks at undervalued prices, and I have planned for all of those scenarios. I'm set up to take advantage if they fall more. And I can also buy the ride up because I have done a valuation and know when it's undervalued, even if it goes up, and my finances are in line to continue to allow me to invest through this entire whole ordeal. That is why I believe I am right where I need to be right now in this market. And if you don't know how to plan and do evaluations, set price targets, and you need help and support doing these things during these troubled times, make sure you join the Market Insiders private group before the sale ends. And if you don't know what other stocks to consider buying, click this video right here for 9 stocks I've been buying like crazy, or click this video here for even more stocks I've been buying lately. So thanks for watching, and we'll see you in the next one.